Hi, hello again. Now, if you've been doing ITP for any time, you'll have come across somebody telling you that ITP is a Ponzi. Sometimes these are well-meaning friends who are trying to protect you from losing your money or getting into trouble. Sometimes they're, well, just trolls, to be perfectly honest. Okay, so what is a Ponzi? Well, normally it works through a number of different levels, and when people join up, their investment pays for the people above them. Then they have to go out and get other people themselves, and again, the new people, their investment pays the people above them. And the new people there, what do they have to do? They have to go out and get yet more people. It needs to keep growing so that the people keep on investing, keep on paying in, and that way the people above keep on getting paid. This growth cannot be maintained indefinitely, and sooner or later the Ponzi is unable to keep on recruiting people and the Ponzi folds. So is ITP a Ponzi? No. When I first joined up, on the first level, G1, you could do your quantitative trading on up to $500 or 500 USDT. And with that, you could make a profit of $375 every 30 days. That is basically month after month after month. You could make $375, roughly about £300, without recruiting a single person. And so how can that possibly be a Ponzi? Now, again, in time, Ponzi's will slow up. So as they slow up, there is more and more pressure to get more people in to keep it going. Have ITP put more pressure on its members to recruit more people? No. In August 2023, they changed the marketing plan. On the lowest level, G1, they increased the maximum that you could trade on to 20,000 USDT. That means every 30 days you can generate 15,000 US dollars. Have a think about that for a minute. You can make $15,000 every month without introducing a single person. That is exactly the opposite of a Ponzi. So how does ITP make its money? ITP uses quantitative trading. Now, if you're not sure what quantitative trading is, Google it. Here's a screenshot from my computer when I've Googled it. You can see there's about 113 million results. Quantitative trading is not something that ITP has invented. You see here from Google, quantitative trading involves using quantitative methods and algorithms to execute strategies. This has a broad set of uses. A typical example might be a trader using mathematical model to take a position on what assets should be worth before carrying out a trade. So how long has quantitative trading been around? Well, ask Google. Quantitative trading has been around since the 1970s. So if you think about it, that's half a century. Quantitative trading, when it was in its infancy, most trading was done manually using fundamental analysis and technical analysis. Now, this would have been people with specialist knowledge. It wouldn't have been available to the average person. But it is a well-established legal and ethical form of trading that's been around for half a century. But as you read on, however, the introduction of computers and development of quantitative methods in the 1980s led to an explosion in quantitative trading strategies. Now that's very poignant, that last sentence. An explosion in quantitative trading strategies in the 1980s. Here we are in 2023. The artificial intelligence that we have around today far surpasses anything they had in the 1980s. It's far more sophisticated, and ITP have obviously harnessed that in order to do the quantitative trading for us. So this is actually a screenshot taken from my Quantisize page while I've been doing my quantitative trading. You'll see there it comes up, it starts the quantification, it starts queuing, it starts looking at various exchanges and checking the market prices at various exchanges. You'll see the part I've highlighted in pink there. It starts executing a buy order. BTC is Bitcoin if you're not used to the abbreviations. In this case, it's bought it from Coinbase. Coinbase is a crypto exchange for those who aren't familiar. So it's founded at a low price at Coinbase, and then it executes a sell order where Bitcoin is being bought and sold at a higher price, in this case at another crypto exchange called Bittrex. So the difference between those two prices is basically how we make our profits. Now, a lot of people will tell you that the difference between these two exchange prices is not enough to earn the kind of money that we're making. 2.5% a day on the lower levels, up to 4% on the higher levels. And they are absolutely right. Taken on its own, that's correct. And this is why people say, oh, it must be a Ponzi because you can't generate that kind of money on the price difference between these exchanges. So it's important to understand how ITP does actually generate the money. So we're going to have a little bit of a closer look at that. So first of all, if I zoom out from this screen a little bit, now I am on level 4, G4, which means I get 8 turns a day at the trading. And you'll see near the top there, several times today, 8 out of 8. I've got 8 turns left. And today's qualified amount is the amount that I will be trading on. And you'll see there that it's 23,465. I'm not going to read out all the decimal points, it gets a little bit monotonous. So this screenshot is taken halfway through my first trade. So if you remember that figure, 23,465. Also on level G4, the amount you make per day is 3.3%. So we'll have a look at how that 3.3% is derived. Now, at the bottom of the page there, you'll see quantitative records. And to the right of that, you'll see a little blue arrow. If you tap on the arrow, that will take you on to more details about the actual trade. So you'll see on the left, the buy price at Coinbase was 26,699 and being sold at the ask price of 26,710. So look at the maths of this. So the profit here, the difference between the buy price and the sell price, is just over $11. Look at the profit as a percentage of the original price. The way we do it, we take the profit, we divide it by the original price, the buy price from Coinbase, and multiply that by 100. That gives us a percentage of 0.04125%. So again, that's nowhere near the 2.5% to 4% that we're making, but bear with me. Now, first of all, as I'm on G4, G4 has 8 trades. So if I times that 0.4125% by 8 times, that's brought me up to 0.33%. And we're still a factor of 10 below the rate that I'm supposed to make on G4. Now here comes the clever part. If you look in the top left-hand corner of the quantitative records at the investment amounts, you'll see the amount we're trading with is 234,652. So this is actually a factor of 10 times more than I actually had to trade with. This is because ITP uses leveraged trading. Leveraged trading is generally a high-risk form of trading where basically you borrow money to do your trading from the markets so you can trade with a higher quantity of money. In this case, we're doing it tenfold. We're doing it 10 times the amount that you actually have. If you're doing this yourself manually, this is very high risk because you can make enormous profits very quickly. You can also make enormous losses very quickly. However, with ITP, first of all, the trades are done very, very quickly, so there's no time for the prices to go down. Secondly, the artificial intelligence is able to predict whether the prices are going up or down anyway and have a good idea what they're going to do. And it only needs to cover a very short space of time. So we trade with leverage trading 10 times very, very quickly. So if I take my 0.33% and times that by 10, because we're using 10 times the amount of money, then we get my 3.3%. So this is how ITP can reliably generate 3.3% for me on level 4 every day. Now when people tell you that ITP is a Ponzi, hopefully you'll be able to explain to them why it's not. If you like, you can just send them a link to this video and let this video explain it for you. Now, some people will also call ITP a pyramid scheme. Now, a pyramid scheme is different to a Ponzi. So the next video up will explain to you exactly what a pyramid scheme is, and it will also explain to you why ITP is not one of them. If you like this video, please leave a like and a comment. It all helps with the YouTube algorithm, and thank you very much for listening.